my crypto friends. Today this is Crypto Coin Rumors and I'm here with a new video. Today we be talking about investor sentiment and investor psychology. So, why are humans investing in Bitcoin? Why are people attracted by this innovative phenomenon, Bitcoin and cryptocurrency in general? The mentality of humans is attracted to historic success stories. And if we are talking about real life possibilities of getting more wealthy, people simply get interested in that deal of the day. All these articles and news of simple amateur guys and teens who in the first years of Bitcoin's life would buy this new virtual currency to play games and get a Bitcoin prize if you would reach a higher level on the game. We're just simply fooling around a little and would never be thinking back the enormous potential that Bitcoin could eventually become one day. Well, these amateurs were mostly non-educator professional investors, and so we're not buying Bitcoin as a true and experienced and qualified investor would. They were just lucky to have found the next big thing. After some time, this investment would confirm a potential and explosive new way of making money. So, as more and more people were getting informed of this new asset, smarter and more professional investors would come in the space. Now, the psychology of human beings is that as something in life has success, gradually more and more people get interested to that thing and then create bubbles and bursts. This then comes out to market behavior and market psychology. Then, as the majority of us investors with a decent knowledge of how markets work kind of shape up the markets with volatility, corrections, and rallies, smarter investors buy in the value zone who are less on average, and the amateur one buys the hypes or the overvalued areas of the market cycle. Bitcoin is still 10 years old, and its movements act like a youngster with high levels of volatility. As a human being gets more mature in age, an asset performs almost the same way. As you might have noticed by taking a look at a historic Bitcoin graph, you can easily see the initial years with explosive prices and growth. And as time goes by, it is slightly beginning to get less volatile as it grows its capitalization and becomes more mature. For example, compare Bitcoin to a newly born altcoin, as you can immediately note that a new and tiny capitalized altcoin will likely have way more volatility than Bitcoin. So, returning to the psychology and investor sentiment part of this video, we can understand that market cycles are generally created from human sentiment and emotion. Here we have this image from cheatsheet.com, who created this beautiful and amazing chart that describes market sentiment and psychology of human beings and how they react in market cycles and how their emotions contribute to creating these market cycles. As you can see, for example, hope is an area of signs of market recovery after a bear market. In this phase, investors start to gradually enter the markets but being very cautious. Optimism is where things are getting better and markets are on a comfortable positive trend. Belief and then thrill, where investors believe that the current bull market will last forever and prices can never go back down. Euphoria is the absolute period when everybody is freaking out. Nothing can stop us, and human emotions bring us to believe the rally will never stop, when the smarter and more professionals are able to understand the extreme hype that is occurring and that prices are super inflated. And these are the ones that are silently selling and getting away from the markets, and they will be profiting enormously. The sixth stage, complacency, where you will meet first signs of market turnaround. A reversal is a couple of steps away. Seventh stage is anxiety, where investor sentiment becomes aware that assets are losing value, and most caught in the extreme euphoric area are selling at losses. Stage 8 is denial, where price drop heavily now, and investors refuse to sell at a hard loss, as they are convinced of having done a wise investment. Stage 9 is panic. Here we are in a strong bear market. Now investors are desperately selling because they don't want to lose their whole investment. Major crashes and sell-offs are occurring in this stage. The final stage is depression, where people have lost hope in investing, and it is a truly depressive stage where disbelief is a common word, and this phase generally will last quite a while, where prices are at yearly lows with little volume, and afterwards consolidation starts to build. So, in this demonstration, the psychology of human being many times lets our emotions win by investing in the wrong phases of the markets, by possibly buying at the euphoric moments and then selling in the stages like 8 and 9, respectively, denial and panic. Okay, my friends, so that's it for this video. I hope you like my video, and please don't forget to subscribe to my channel and click that notification bell. See you in the next video.